Good morning, everybody. Welcome. Thanks for your patience. I'm Joanne Koontz, and I'm here today with Marina Parkin and the infamous Jackie Durham, my two lovely partners, and we are taking a three-pronged stool approach to the latest and greatest on PPP. So one of the things that we wanted to do today was kind of go over the most frequently asked questions that we've been encountering from you guys throughout the last couple of weeks. We can clearly see a pattern. We can see where the concerns are, where the uncertainties lie, where the frustrations are lying. So we thought we would bring it all to you straight from the practitioners so that we can help solve some of these problems and maybe, if nothing else, just commiserate a little bit on the uncertainties that are out there so you don't feel like you're alone. I can tell you that the loan forgiveness application dropped from the SBA late last Friday. The three of us have spent the bulk of the weekend since that came out going over it ourselves individually and collectively as a group, bantering back and forth. So if you've read it and you're cross-eyed, so are we. So don't be alarmed. Without further ado, let's get going. Jack, can you share the screen and we'll...
Yes, absolutely. And before we get started,
as we go, please enter them into the chat box and into the Q&A box, and we'll make sure that we get those too.
Thank you, Joanne. And Jackie, before we get started with our first question, let me just say a couple of things about this loan application that dropped. As Joanne said, we spent, I would say, majority of the weekend reading it and rereading it and looking at the instructions and doing some simple calculations. SBA specifically said that they will issue guidance. So the guidance that we keep saying is coming, they said it is still coming. The issue with the application is that it did answer some questions on exactly how some things are going to work, and it provided some dates of the testing period. However, it created probably 100 other questions. The nice thing is, in terms of mathematics, because I'm a detailed guy, it did provide sort of a step system of how your forgiveness amount will be reduced if you didn't pay enough to your employees, if you didn't have enough employees, if you didn't spend proportionately 75% on payroll, and so on and so on. So it's going to be a matter of trying to figure that out. And like I said, the guidance is certainly coming. And this is why we didn't really want to spend the time this week, or especially today, to go through that application with you guys, but instead to go through these frequently asked questions, if you will, that we have been getting that seem to be pretty common, and that's why we wanted to take time today with this question. So Jackie will get us started here. Thank you, Jack.
All right, so we're going to be talking about this safe harbor rule that was released last week, which is supposed to offer some relief and clarification regarding that good faith necessity certification. We're also going to be covering our clients' most frequently asked questions to date. And then at the end, once we've collected a few questions from our participants, we'll go over those, time permitting. So I guess we'll start with the FAQ that was issued last week was really building upon a previous FAQ that was issued that was supposed to offer borrowers some clarification about what they needed to consider when determining if they could make that a good faith certification about the necessity of the loan. SBA told you to consider your current business activity as well as your liquidity, but these terms weren't defined. And ultimately, I feel that FAQ ended up with more uncertainty than it did clarity. So this question was issued by SBA last week. And the question is, how will SBA review borrowers' required good faith certification concerning the necessity of their request? And SBA came back and reiterated the fact that you have to make this certification under the loan application. However, they created a safe harbor for loans that fall below the $2 million mark, and basically provided that as long as it falls below this mark, they will assume that this certification was indeed made in good faith. The reasoning behind this is they have obviously limited resources. They have bigger fish to fry. They want to kind of go after and automatically audit those larger borrowers, those who likely do have adequate sources of liquidity. They assume that a borrower that's falling under this mark and falls within the safe harbor is less likely to have these sources of liquidity. And they also wanted to encourage PPP borrowers to go forward and take these funds that they may need to keep their employees paid. Because whenever that previous guidance came out that mentioned the current business activity as well as the source of liquidity, like I said, it really created uncertainty among borrowers. So a lot of borrowers were returning the funds, suspending their applications, and this was really preventing a lot of borrowers from taking advantage of what was intended from the program. I think that this is a good segue into the first client FAQ. So Joanne and Marina, unless you guys have something to add to this before we get going, I'll go ahead and dive in.
Yeah, go ahead.
Okay. So the first question from our clients is, does the $2 million new safe harbor rule mean that I will never be asked to show that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant? We would say no. The safe harbor rule basically is SBA's rebuttable presumption that you have made this certification in good faith. It doesn't mean that there's not going to be any civil or criminal liability exposure if somebody has in fact made a false certification on a federal loan application. SBA might be forming, there's been speculation about task forces being put in place and SBA working hand in hand with IRS to sort of unveil borrowers who may have made this false certification. So what I would say is I would keep, one of the sources where this exposure may come in would be a disgruntled employee who is happy to share the information about the fact that a borrower took out a PPP loan when really there wasn't a need for that. So what I would recommend is that borrowers keep this information to yourself if you're getting a PPP loan. I wouldn't tell anyone or tell as few people as you have to, because you never know what information could trickle to others and what those people could do with that information. Whistleblowers actually receive financial benefits from sharing this information with the Department of Justice. So I would just say be careful who you share this information with.
Absolutely. Another source too is the IRS audit. You may get audited by IRS, just, you may get picked randomly, not for this purpose, but let's say you're a company and you get picked for an IRS audit. IRS audits you and realizes that your revenue never decreased, your income was always up, and you got PPP loan proceeds. There's nothing really to stop the IRS auditor at that point to provide that information to the Department of Justice. And that leads into, again, looking that you have made a misleading statement on your application. So most definitely, I would still be very, very careful there. On question number 2, this is a good one. When people read that and they saw 2 million, many of them said, oh wow, 2 million, safe harbor equals all my loan under 2 million is going to get forgiven. No, that is not the case. The loan forgiveness is going to be determined based on the loan forgiveness application that you need to fill out. As of right now, looking through that application and everything we have seen, there's no threshold or I guess safe harbor amount to say that any loans under a certain amount will not have to go through the loan forgiveness application. So even if you received, $5,000-$6,000 of PPP money, you still have to go through the process of filling out that loan forgiveness application after the loan period is over. So that's certainly just to clarify that. We've gotten that quite a few times since that 2 million rule came out. The next question kind of goes in line too with the first one. Is it basically the question is it all or nothing? So if I do not comply with these different types of requirements, for example, if I do not spend 75% on my loan proceeds or 75% on the forgivable or funds, and we'll get into that in just a minute, on payroll, or I don't have enough employees even, does that mean the whole thing does not get forgiven? That is not the case. The forgiveness is going to be calculated proportionately. So the loan application is taking us through the steps to figure out how much the forgiveness is going to be reduced by A, whether you cut your payroll costs by more than 25%, and then B, if you had less employees than when you started with. And then of course, if you don't spend 75% on payroll. The other thing that is going to happen here is the EIDL grant that you may have received before or during the time when you got your PPP is also going to be deducted from the loan forgiveness amount. And what else I wanted to, and again, not to get too technical at this point, but you guys have to keep in mind that there's a little difference between what is forgivable use of funds versus what is permitted use of funds. So in order to calculate forgiveness, you have to comply with all of these formulas, not reduce, your payroll more than 25%, not to reduce your head count, and not to have, less than 75 spent on payroll. However, you actually, during the life of the loan, even if the loan is not forgiven, you are still only permitted to use the funds on payroll and other non-payroll costs that are only relating to rent, mortgage interest on the business property, and utilities. So if you are not in the right proportion, you may not get all of the amount forgiven. However, you are only permitted to be using this loan only on those uses. So I just wanted to clarify that as well. I think that's all I wanted to mention on this question. If Jackie, you wanted to add anything else. Essentially, my point that I'm trying to drive here is, guys, it's not all or nothing. If you have, not met those requirements, you are still going to get a good chunk of your loan forgiven, depending on what the reduction is in employees and the payroll proportion.
Marina, I want to jump in real quick on that one too. This is beyond the scope of what you guys have on this slide with respect to what's forgivable. But can you talk too about, for the folks who decide I'm not able to spend the money during the 8-week period, but instead I'd rather keep it, can you talk about how you have to spend the money after the 8-week period? Although it will not be forgiven, it will be converted to a loan that's paid at 1% interest over 2 years. Do these restrictions follow you after the 8-week forgivable period?
Yes, they do. So that's what she's referring to when she's talking about the permitted uses of the loan proceeds. So let's say that you don't use any of the loan proceeds during that 8-week covered period, or you don't use all of the loan proceeds. Whatever is remaining after that 8-week period expires is going to be subject to the 2-year term at 1%. You still are required to spend 75% of the total loan proceeds on payroll costs, the permitted payroll costs, and then 25% on the permitted non-payroll costs, which are rent, utilities. And I think because there's some distinctions there's some fine distinctions between forgivable expenses versus permitted expenses. I think we're going to put together a chart of some kind for our clients to refer to, because it's really easy to get those two confused. And it's also important to note that there's different treatment for independent contractors and self-employed Schedule C filers. So what's permitted and forgivable for those folks is going to be different as to what's forgiven for the corporations and partnerships.
And Jackie's been chomping at the bit to have an opportunity to make another chart, so stay tuned.
And this will be very important because as many of our clients have gotten these loans at various times. So for some of our folks, the testing period has already started. And for some, they're still awaiting funds, and some are still in the application process. So it'll be important to see, because a lot of our clients may be out of the loan already in another, let's say, month or so, and they may still have some proceeds left, and we'll need some guidance on how to continue spending that money if they don't want to pay it back at that time.
Right. And something else I want to note, there's been a lot of discussion in the news about the lawmakers and the fact that they realize that there are businesses who it makes no sense for them to use their funds when the 8-week period commences, because they're not even permitted to be operational at that point. It makes no sense for them to pay their employees to do nothing, but under the current rules, that's what they're required to do. So the government has heard these complaints, and supposedly in the coming days and weeks are going to be issuing possibly some exceptions to that rule, and hopefully that is forthcoming. All right.
Jackie, do you want to cover the question 4, which is the proportion? Jackie and I discussed this particular question probably about half a day on Saturday.
Oh my gosh. So
our fun weekends.
I mean, there's been a lot of confusion surrounding this, understandably. I mean, practitioners are confused about this, and I see it being explained improperly all over the place in articles. So it makes sense. So this question is, I have high rent expenses and utilities, but I understand that I need to spend 75% of the loan proceeds on payroll. I am confused. Well, everyone is. So the answer to that is, again, many borrowers are mistakenly interpreting this as providing that if 75% of the proceeds are not used for payroll costs, then that 75% portion will be not forgiven. But as long as you spend the 25% of the loan proceeds on the non-payroll costs, that will be forgiven. And that's not how it works. It's not a cliff. So basically what you spend on payroll during that initial 8-week covered period is going to establish the benchmark for what can be enjoyed in forgiveness as to the non-payroll costs, such as the rent and utilities. So for instance, if you have a loan of $100,000, you're only able to spend $60,000 on payroll during the covered period, you're going to be capped at $20,000 for what can be forgiven for your non-payroll expenses. Maria, you want to take this?
Okay. This is a good one too. So I received my PPP loan proceeds and I am bringing back my employees. However, I have a couple of employees or one employee that does not want to come back. So what do I do? Because I don't want to get dinged for losing employee count. So SBA came up with some guidance, and I think this was also about last week, that says, look, if you have an employee that you have made a written attempt to ask back, so in other words, you've got an offer for them to come back in writing, and they refuse to come back, which is also documented in writing, then you will not be penalized for that employee causing the reduction in headcount. So that is very, very important. So if you have made an attempt to bring back this employee and the employee does not come back, that is not going to get you penalized for having reduced headcount. However, and this is also very important, if that person does not come back and you have not replaced their salary amount, then of course you're going to have reduction in payroll spending. So you are automatically going to have less payroll spent. So the recommendation there is you may just have to hire a new person to really do the work that this person has left behind. Or you may give raises to your other employees, including yourself, and or give bonuses or whatnot in order to supplement your total payroll amount. So again, you're not going to get penalized for reduced headcount if you've made the attempt to bring employee back, but you then still need to worry about actual reduced payroll costs from them.
Right.
Okay.
All right, so next question. I received my loan proceeds, but we are not yet open at full capacity. Can my 8-week covered period begin when I'm fully operational? Unfortunately not. Under the current rules, the 8-week period starts on the day the loan proceeds are placed into your account. Again, we do believe that there may be some loosening of this restriction, hopefully soon, but that's still to come. What I will note is that on the loan forgiveness application, they did clear up some questions with respect to the incurred and paid standard that's under the CARES Act. So currently the Act provides that forgivable expenses have to be both incurred and paid during the 8-week period, which is not practical. So the forgiveness application establishes that as long as the forgivable expenses were incurred and then paid on their next regularly scheduled pay date, that those will be deemed to have fallen within the covered period and will be forgivable. Something else they offered to help borrowers from an accounting standpoint to ease the burden a little bit is there's an alternative covered period that is applicable to the payroll portion of the loan proceeds that are used during that 8-week covered period. So let's say you get your proceeds in the middle of a pay period, you can elect to move the covered period for purposes of payroll out to the first day of your next payroll period, so that you can track that on an even basis with your normal payroll schedule. So that will make it a little bit easier for borrowers to track and follow and calculate that. I would also say that in addition to tracking your forgivable expenses, I would make sure you're tracking the use of all of the loan proceeds. Because again, this goes back to what is permitted versus what is forgivable. Once you get outside of that 8-week period, you still have to make sure that the balance of those loan proceeds are used properly in proportion to the 75% for payroll, 25% for the permitted non-payroll.
Get this question quite a bit, and this is where the answer to changes a little bit. So I heard that I have to open a separate bank account. I haven't had a chance to do it. My bank says it's too difficult. Do I really need to push through it and open a separate bank account for this PPP loan? The answer is no, you do not have to. If you already have and you have segregated money in there, that's okay. Because at the very beginning when this was coming out, that was the advice that all practitioners were given to the clients, is just to make it much simpler to track the funds. However, in the latest sort of correspondence and everything we've heard and we have read, is you actually do not need to have a separate bank account. You just need a really good system for tracking all the expenses that you spend out of that loan. In fact, sometimes having a separate bank account may work the other way for you, because, for example, payroll costs that are automatically coming out of your operating account, or you may have a separate payroll account where you put money in for payroll costs. If you didn't move proper amount of money from the PPP account to the payroll account, or you move too much or you move too little, or something accidentally came out of one account and not the other, it may be more of a banking nightmare for you, and you lose a sight of a bigger picture, which is really tracking your expenses. So please don't add another thing on your plate. That's what we would recommend. Just put it in your regular operating account and just have a good system, whatever that system is, for tracking everything, all of the allowed uses of funds that you have spent during this loan period. Okay. This is a good question too. So I included what I pay to my independent contractors in my PPP loan calculation. And guess what? I did get the loan based on that amount. So I now have the loan, and I understand that I cannot pay my subcontractors using that funds. What should I do? Should I convert these subcontractors to employees? Well, the answer is it depends. Most of the cases, if these individuals were your independent contractors, they were such for a reason. It's too costly for you to have them as employees because of the payroll taxes, the liability reasons, they're working elsewhere and just doing some piecemeal work for you. There was certainly a reason why they were subcontractors. Now is not the time to convert them to employees. The cost of converting these people from independent contractors to employees, even if we look just at the payroll cost of doing so, your payroll tax that you need to pay for these people is going to way more than offset this PPP loan that you received. Because remember, this PPP loan was only based on 2.5 times monthly average. So even if you got several $1,000s, it's going to cost you a lot more than that to now convert these individuals to employees for the 8-week period and pay the payroll tax, because remember, the payroll tax is still due. So now you have to worry about Social Security and Medicare a tax on these individuals. And then after 8 weeks, you're going to fire them and convert them to independent contractors. It's certainly not worth it. As you know, going back to the labor law, if these individuals are actually your employees by all of the definitions and the tests, then convert them and keep them as employees. But most certainly don't do it just to satisfy the PPP loan, because it's going to be way more costly for you than the benefit of the PPP loan that you receive.
Also jump
Next
in there real
question.
quick
Yep.
before you run on and say,
Sure.
our good friend Chris Sensenig, who's joined us a few times, the labor and employment attorney, would also, what is probably, if she's listening to this, is having a heart attack, because you also can't be flippant about how you treat people in terms of employee versus independent contractor for Department of Labor standards. So you don't want to run into a problem trying to capture an 8-week benefit. Not only might you have additional expense in terms of the payroll taxes, you can trip up and run afoul in your PPP loan forgiveness application, but you certainly don't want to trigger the interest of anybody at the Department of Labor by flip-flopping these people. They really should be categorized appropriately based on their services provided, not on the convenience of the tax planning. So just that rule stands anytime, but particularly now, let's not get crazy.
Absolutely. Next question is, I received my PPP loan and now I don't know where on my books I should record it. Is it a loan? Is it income? What is it? So the question is, again, as my favorite answer is, it depends. It really is whatever works for you to best keep track of how the money is spent. We have talked to one of our bookkeepers that we work with very closely, and she suggested, and the way that she has been doing it for her bookkeeping clients, is she sets it up as an income, other income, and separates it into a different class in QuickBooks file. And then the expenses that are all permitted expenses, like the payroll during that time, utilities, rent, mortgage, interest, she also assigns to the same class. This way, from your QuickBooks file, you can pull a report that then says everything under that class, where you see all the corresponding expenses and the corresponding income, if you will, to see what you've got left over as yet to spend or potentially non-forgivable. That sort of thing in QuickBooks is definitely going to help you when you get closer to see if you need to spend more money, or to help you calculate how much loan is going to be forgivable. So you can definitely record it as a loan payable, because you don't want to say that it really is income. Again, it doesn't really matter. You just really want to track expenses. At the end of the day, the important thing to remember is, as of right now, and again, this is a big deal and I don't want you guys to miss that, the IRS has sent out a rule that says the expenses that are going to be covered by the forgiven PPP loan are not deductible. Not deductible. So however much of the loan amount is going to get forgiven, it's going to reduce the deduction for those relevant expenses. So maybe putting that PPP as income makes a little bit more sense in your books, especially if you've got a bookkeeping system like QuickBooks, because it will allow you to essentially take that other income and offset the expenses that you've incurred to get down to the net income, which you will know is going to be more or less good representation of the 2020. Again, that is still, there's been a lot of fighting about this particular rule because, you know, practitioners are saying that the intent of this was not to essentially cheat people out of those extra deductions because what you've given with one hand, you've taken with the other by, you know, not allowing you to take a deduction. However, we have not heard any decisions at this time about this. So, so again, just, you know, have a really, really good system. If you're not using QuickBooks, it's okay. Just get an Excel spreadsheet going, record everything you spend from the day you receive the loan on these permitted uses of funds, and that is definitely going to help you when you get down to the forgiveness application part.
All right.
Anything else, Joanne, on this issue? I'll take that as a no.
Sorry, I was muted. I didn't want you to hear the papers. No, I'm good there. I agree with you there. We've actually got a question in the chat box with respect to this. I'm going to jump on after this idle question you hit to give you a follow-up on this one.
Wonderful. Yeah, this is a good one. A lot of people, when they applied for the PPP application, they actually didn't indicate that they also applied for EIDL, even if they have, because they may have believed at that time they're never going to get it, or they didn't understand what it was. So they never indicated that, yes, I applied for EIDL. So the question that we're getting a lot is, if I didn't indicate, but I actually did receive an EIDL advance. What do I do? And the answer to that is the EIDL advance that you received, and it was down to $1,000 per employee, max to a $10,000. It is going to reduce the forgiveness portion of the PPP loan. On the PPP loan forgiveness application, there is a spot to say how much EIDL grant you received. So when you submit that application, whether or not on the original loan application you put down that you applied, that doesn't matter. On the forgiveness application, there's a spot to say if you received any EIDL grant. And when that application is processed, then I believe that's how they're going to match if you've received any EIDL grant. I also, and I don't know, Joanne, maybe you want to cover the EIDL question too, because I saw a question come through to say, I got PPP and EIDL, and we can certainly address that later.
Yeah, we have that question coming up.
Okay.
Joanne, do you want to jump in with that, the participant question?
No, we can do that. If you've got that coming later, that's pretty much what, you know, is pretty much what that's on. So I'll catch you later.
Okay.
Yeah, maybe we should get through our questions, because I'm kind of monitoring some of these questions, and I know some things are coming up too. So let's get through our questions and see. Hopefully we can help people answer some of those that they're posting at the moment. Pension contribution. I included pension contribution in the amount of the PPP loan that I applied for. Do I need to make contributions for the 8-week time of the loan? And the answer is yes. However, there's no guidance on how and how much you should be doing. So the question is, and a lot of practitioners have posed that question to say, is it a pension contribution for the year prorated for the 8-week period, like we prorate payroll, or is it a full contribution? Or is it also full contribution for 19, because a lot of companies are now funding their 19 contributions? Or can I also fund my 2020? So essentially, can I just use this big pension funding if I have leftover money or excess money or whatnot, and put all of that towards pension? So I believe they specifically said that the guidance will be coming to determine, to help us determine how pension is. We definitely know that it is an allowed use of funds and permitted use of funds. So it's going to be a matter of exactly how much and how you make those contributions. So please stay tuned on that answer. But we're getting that question quite a bit. Next question, here's the EIDL and the PPP question, Jack.
Right, so I received both PPP and EIDL loans. How much is forgivable? And so keep in mind that certain EIDL loans were required to be rolled into the PPP loans. So if you were a PPP applicant and you had already received an EIDL loan, under certain circumstances, you would have to essentially refinance the EIDL and wrap it into the PPP. But it's important to keep in mind that the EIDL is not forgivable unless it's rolled into the PPP loan. So the EIDL grant, which is that initial $1,000 per employee head up to $10,000, that is forgivable. But it will reduce the forgiveness received under your PPP loan because SBA was looking to give you basically forgiveness under one or the other, not both. So in order to ensure the PPP is forgiven properly, you just need to make sure you're spending the funds on forgivable expenses during that 8-week period, and just follow those PPP loan forgiveness rules. If you do have the PPP and the EIDL loans separately, the EIDL is going to be subject to repayment under those particular terms at the applicable interest rate. Joanne, does that cover what you were going to ask?
Yeah, the only other thing that they asked is if the EIDL grant is free, why does it have to become a loan under PPP? And I think you've touched that.
Okay.
Okay. Ha! I received 2 PPP loans. I got both. I applied with 2 different banks. And this was a big issue too, if you guys remember back when we were saying, you know, you applied with Bank of America or you applied with Wells Fargo and one bank was out of money, and then you went to a small local bank who started taking an application. It was kind of a hot mess time where people were applying where they could. And amazingly enough, some individuals did get 2 loans. Our recommendation is certainly to give 1 loan back.
Yeah, there's definitely a a regulation that specifies that you can only take one PPP loan. The lawmakers are talking about issuing in the future potential additional PPP loans, but as for right now, under the current act, you can only take one. All right. I understand that I can use some of the PPP funds to pay under a lease entered into before February 15th, but my existing lease, which was in effect as of February 15th, is going to naturally expire soon, and I will be entering into a new lease. Will the rent paid under the new lease agreement qualify for a forgivable non-payroll expense? Unfortunately, no. According to the current regulations, only rent, mortgage interest, and utilities that are payable under agreements which are in effect prior to February 15th are forgivable. So I think that this is just a hole that wasn't covered. I don't think that this is really the intent of SBA. So we're really hoping for some additional guidance to provide relief to those borrowers who are in these circumstances where they have legitimate leases that were in place, but they are just naturally expiring between February 15th and the last day of the 8-week covered period. So we'll keep our eyes peeled for that additional guidance.
This is another good question for self-employed individuals. So I'm a self-employed individual. I applied for PPP loan based on my 2019 Schedule C. I got the loan. Do I actually need to pay myself? Do I need to move money from business account to personal account? Or if I only have one account, do I actually need to take money out of the account? As of we know right now, the answer is no. Because for the Schedule C person, the forgiveness is not going to be based on the actual money spent or taken out of the account. It's going to be based on back to that same 2019 Schedule C that you applied with. So no money movement has to be taken there. And if I may jump in, there's a couple of questions that I'm seeing on the Schedule C people. I hope this answers a question on not having to move money, but I also wanted to clarify that for Schedule C person, if you are just a independent contractor, your pension contribution, let's say you've got an IRA, that is not going to be considered part of payroll, sadly. Whereas if you have a company pension plan, if you are a business and you've got a company pension plan, that those pension contributions are yes, included in payroll costs. For independent contractor, your contribution to your SEP or your IRA is not. As we know right now, again, without any guidance further. The other thing I want to mention is health insurance. It's the same thing. We understand it's got to be under a group plan. So if you're a business and you've got a group plan, even if you may be the only one or two people in the group, that's fine. For self-employed health insurance, if you're the only person, that is not considered part of payroll costs. So sadly, the independent contractors did get gypped a little bit there. And utilities, it's the same thing. If you're using your home office, and we mentioned that several times, if you've got your phone that you're using for business, your home office that you're using for business, those are not really business rent and business utility. Those are not going to be considered part of those 25% permitted funds either. Although those are very well deductible expenses for tax purposes, but for purposes of loan forgiveness under PPP rules, if it is not, pursuant to a lease contract or utility contract, we understand that that is not going to be a permitted use of funds for a Schedule C person.
Right, and I'll also mention that there is, I know we're going to dive in and do a whole nother webinar specifically on the loan forgiveness application. But what's happening also with this loan forgiveness application is it seems like SBA is sort of, as usual, making up the rules as they go and trying to filter through additional rules under the application as opposed to in the form of formal rules and guidance. So one thing that is rumored to have been included in this application is that partners and partnerships are now also not being able to include those same Schedule C expenses. So that's something that we'll dive into further and confirm with more certainty, but there are some other changes that this application is bringing about that might not be so good for partnerships as well. Mm-hmm. All right, so I heard that I can include gas for my business vehicle as a forgivable utility expense. Is that true? There is a lot of disagreement about this among practitioners in general, but I would say no. The current regulations provide that only utility payments made under agreements dated prior to February 15th will be forgiven, falling within that 8-week period. There was an additional regulation that was guiding Schedule C filers back in April that referenced using gas by a self-employed individual or independent contractor driving a business vehicle as a permitted utility expense. But I want to clarify that number one, that guidance was specific to those Schedule C filers. And number two, the guidance only extends to a permitted utility expense versus a forgivable utility expense. So this goes back to that fine distinction between what are forgivable expenses and permitted expenses. Somebody saw that, or several people have seen that and thought, great, my gas is now going to be forgiven. Not necessarily. You might be permitted to use the loan proceeds for that if you're a Schedule C filer, but that gas is likely not to be forgiven.
There's nowhere to go anyway, and gas is free, so you're not missing out on much. It's like the price it was when I was in high school, so let's not get banged up about that one.
Oh, Joanne. Next
you
question.
Can't see me, but I'm still here.
Next question has to do with the partnership and partners compensation. So this is a fantastic question, which also came out last week from SBA. So let me take you guys back just a little bit when people were applying for these PPP loans, and the question is, what is compensation? You know, if you're an S Corp owner employee, you had a W-2. If you're Schedule C, you just had self-employment income. What happens if you're a partner in a partnership? Well, originally, SBA said, if you're a partner in a partnership, you have to include your compensation. So if you're receiving W-2 from a partnership, or if you're receiving guaranteed payments, because actually technically having W-2, you as a partner, you should not be on W-2. You should technically be receiving something called guaranteed payments. So if you're receiving W-2 or guaranteed payments as a partner, please include that. And then the partner said in the partnership, well, all of my income from the partnership K1 is subject to payroll tax. It's an active partnership. It's not real estate investment. It's an active business entity. So the whole income from my K1 is subject to payroll tax. So that means it is compensation. And that means I should be able to use it to apply for the loan. In the SBA at that point, or I guess the guidance or interpretation said, no, just use the amount that you as the partner actually receive as guaranteed payments or W-2. Well, SBA came last week when most people have already received or at least applied for the loans and said, you know what, it's okay. If you get a K1 schedule as a partner and on that K1 income, you are paying payroll tax, then yes, you can go ahead and use that whole income for purposes of applying for the loan. In fact, you can even go back to your bank and revise the loan application as long as, and Jackie, correct me if I'm wrong, as long as the bank hasn't submitted the form to an SBA yet, or it's got to be in the specific time frame where it can still get processed. So we got a couple of questions last week from certain partners to say, oh my God, I already got my loan. Is it worth it? What do I do? Well, a lot of times it really already wasn't worth amending the application. However, the benefit of this is now you can actually use the K1 income that you pay payroll tax on as the compensation to make sure that you get the most amount of PPP funds forgiven. So let's say you got, your funds, and then maybe somebody didn't come back, maybe you've cut somebody's payroll. This higher amount will allow you to get more of that loan forgiven because now you're properly spending it as a compensation for a partner. What is not clear to me is what K1 are they going to be looking at? Are they going to be looking at the K1 from 19? What if the tax return hasn't been filed yet? Are they going to be looking at the K1 from 18? That has not been clarified at all to me, so I am not sure what to tell you guys there. But the nice thing, at least we know, is that a partner, all of their K1 income subject to SC tax can definitely be used as compensation.
Perfect. So there was last week on May 13th issued, along with the increase in a partnership loan, SBA is also permitting a seasonal business to also increase their loan under certain circumstances. So the question we've received is, I have a seasonal business which peaks during the summer months, and heard there was a recent revision to the testing period which could increase my loan proceeds, but I've already received my PPP loan proceeds. Can I still take advantage of this loan increase? Yes, as long as you received your loan before April 28th. So what's strange about this increase, and I think that this was honestly due to sloppy drafting in the regulation, they provide that under this new calculation that went into effect at the end of April, which added in this sort of long summer month testing period for a seasonal business. It's any consecutive 12-week period between May 1st and September 15th. If you will qualify for a higher loan amount now based on that new testing period, you can increase your loan amount. But you have to have received the loan prior to the issuance of this additional guidance. So that's why I italicized before up here, because that's a very distinct difference between this increase and the partnership increase. The terms under which the partnership loan can be increased are much more flexible. This one is a little more limiting based on when you actually had the loan funded. We're hoping for additional guidance that will clarify what I really truly believe was just a drafting error, but nothing has come out yet. And again, you need to make sure that you have the required documentation to support the calculation increase, and the 1502 form deadline. A lot of practitioners are saying, hey, tell your lender not to submit that 1502 form so that you can increase your loan. Well, the problem is the regulations actually provide that it's either if the 1502 form has been filed by your lender or if it's due from your lender. So just having them hold back that 1502 form is not going to extend that time frame for you. Does that make sense, Marina?
Mm-hmm, absolutely.
Okay.
Yep. Absolutely.
And you know, something else I just want to add, this isn't in any of the slides, and again, this is something that we're going to dive into with a little more detail in the application for forgiveness. Something that was included that I have not seen previously mentioned in the regulations is the fact that the Schedule C filers were limited to their owner replacement compensation not exceeding either the $100,000 mark annualized over that 2-month period or their 2019 net income. To my knowledge, this did not apply to partnerships or corporations previously, but under the application it does. So if you are a corporation or a partnership, your owner compensation that can be forgiven is, and I believe that can be permitted to be paid under the loan, is going to be capped at 2019 net income. So
that's correct.
We'll cover that in more detail, but that's another departure from the regulations that was just kind of casually slid in through this forgiveness application.
Mm-hmm.
So Joey, do you have any other questions from the participants?
Yep. Marina's hitting a lot of them in the Q&A box, and so I think we're good so far.
A couple of good questions too that I wanted to point out. If part of my loan is not forgiven, can you just give it back to taking a loan? I understand that that is true. 8-week period. If you have a unused portion of PPP loan that you have not used, then that will not be forgiven. I definitely think at that point you can give it back before converting to loan. But now don't forget, guys, this is a really good loan to have. It is, 1% for 2 years, and you don't have to make payments for the first 6 months, and the interest not chase you for that first 6 months either. So if you really feel like you need to keep that funds, if you haven't used them all in 8 weeks, and keep them as a loan because you really still need to keep paying your employees, we suggest please do. I mean, this is a really good loan to have, but I think at the time, if you really feel like you're back to normal and you don't need the funds and you don't really want to convert it to a loan, yes, go ahead and do give it back. A good question too came up is will the information on the loan application be compared to the one on the forgiveness application? There's no guidance on how to calculate full-time equivalents. We will get back to you on that. So yes, they came out as part of this application instruction on how to calculate full-time equivalents. I can tell you that it is very simplistic and a little bit strange to me. I guess they're just trying to keep it as simple as possible. The way that they're telling us to calculate full-time equivalents is 40 hours a week. And if a person is working 40 hours a week, it's considered one person as a full-time equivalent. If they're working under 40 hours a week, it's half of a person for full-time equivalent calculation. So that's a little bit weird to me, but they're certainly using the 40-hour-a-week mark for the one full-time equivalent. They're also going to be basing that number based on the number of employees that were employed by I think March, I want to say it was March, but they also had an additional dates on the alphabet soup. But we will, it was a question from Angela. Angela, we will cover that when we get into a little bit more detail on the loan forgiveness application, webinar or whatever the case may be. But we'd like to wait for just a little bit more additional guidance on that. It's very confusing, most definitely. I think we covered a lot of the questions that have. Joanne, do you see any other questions that we kind of haven't addressed? I don't see anything that you didn't answer.
One thing that I have seen that's maybe worth mentioning out loud, we've had quite a few folks who have rental properties, and they have posed questions both in this forum and to my email over time to say, hey, I've lost rent because of the stay-at-home orders. So people were wondering if lost rent is a consideration for your PPP application.
So I believe it is for commercial properties, and correct me if I'm wrong, Marina, I believe we've discussed this specifically, that if it is a rental agreement for an active business and it's not passive income, that yes, that will be deemed a business who qualifies for the PPP loan. But I believe if it's a passive rental, like a residential rental, I don't believe so.
That's correct. That's my understanding as well.
And those residential rentals are deemed, even in the IRS rules, as passive activity. So you have to be essentially a property manager to show that those losses of rents were really part of your income. Even though landlords who have a portfolio of rental properties, that is their that is their income, but they're still that's still not going to rise to the level of active activity in most cases. So if you do think you have enough active participation, then that may be something to look into. But if you just have one or two rental properties on the side, that's not going to get you there.
Absolutely. There's going to be a lot more stuff coming out, guys, too, about the definition of rent and utilities. So we will address that. I would anticipate sometime next week. What is utilities and what is rent? The one thing that has come up too, we didn't include that, but it just keeps coming up too for us even this week, is if I own my own building and I rent to myself, my business entity rents to myself, is that deductible rent? Is that permitted rent? Absolutely it is. The key is to have a rent agreement. Going through the application, guys, just the way it's been issued is on the instructions, you actually have to attach all the support for all the calculations you're going to put out on there. So you are going to have to attach your payroll reports for this period. You are going to have to attach the backup to the payments for utilities and rent, and any rent agreement and so on should be in there as well. It's not like the tax return where, oh, keep all of the backup in case you get audited. There's going to be some of that it does not have to get attached, but a lot of those main items are going to have to be attached to the forgiveness application. So this is going to be quite a package for those folks that have a lot of moving pieces during this time.
And again, like we've been saying with everything, the key here is going to be document, consistency, and behaving as you were in your ordinary course of business. Now is not the time to give crazy bonuses or cut people, you don't want to do any prepaying expenses like, oh, I'll pay my car insurance through, you know, the next year just to try to dump the money. You don't want to be doing anything you weren't otherwise normally doing until we have more clarification. And I've had a lot of clients who are starting to get antsy because now they're saying, look, I've had the money 2, 3, maybe even 4 weeks, and I still don't know how I'm supposed to spend it. I understand that, but you know, you got to stick to what you've been doing. And then if we need to be flexible as the guidance drops, we'll do so within the rules. But what you don't want to do is have to undo something that you've done here in the last 4 weeks or in the next 4 weeks because you've paid something or behaved in a way financially that's out of the norm, and have that cut off your forgiveness, your loan forgiveness. So be patient and be typical. That's what you want to see. I want to see this business operating as it usually was. And then if we need to make adjustments, we can do so. One of the things that I would also recommend is if you do have folks that you're trying to pay a little bit more, you want to make sure that you have documentation that the additional pay you're paying these folks is related to the additional duties that they've assumed during this time. You're hard pressed to find a business that doesn't have folks cleaning things or rearranging or even modifying workspaces or you know, modes of delivery for your services. So any of these folks, be they planners or physical movers of objects, but you know, anybody who's sitting there strategizing how we can do this with less contact. And that goes even down to the marketing folks about how they're going to message that you're providing your services in a different way. All of those additional services that they're providing are certainly compensable, and that would be a great reason to increase pay or provide a bonus because they've done additional work. I have posted the link to the SBA loan forgiveness application in the chat. I wouldn't go crazy on it yet unless you can't sleep. It will put you to sleep. But it is there if you want to check it out and start to review that. We will be in touch. This Thursday, we're going to have Kathy Collins from Sable Palm Bank join us so that we can get a picture of the inside of the bank, what's going on, and we'll be able to ask her some questions about what she's seeing. At this point, she's been incredibly helpful in getting PPP funds into the hands of many of our clients. And so we wanted to see, you know, hear the war stories from what's going on behind the bank. So you can tune in on Thursday, May 21st at 10 a.m. to hear Kathy Collins. As always, the recording from today's session will be emailed to you for attending. If you have questions, you're welcome to email them to us, and we'll continue to use those questions to answer further questions on future webinars. As we get our arms around the loan forgiveness application, we will be doing webinars, and we'll do several of them on that as that information and further guidance starts to drop. So Jackie, Marina, anything else from you ladies?
I think that's it. Be patient with us, guys. We are trying to process all of this as well. We are trying to read and also attend other practitioners' webinars and see what other practitioners have to say and their interpretation. So there's a lot of information coming at us. If our answers change from one week to the other, we're just trying to bring you the latest and the greatest while still doing our regular tax returns. So it's been an interesting year, that's for sure.
Yeah, this is definitely a process, not an event. So it's not like, oh, the answer's on Tuesday.
And there is supposed to be a lot more guidance coming our way. You know, a lot of this guidance has served to really just muddy the water even more. But I'm hoping that it will do the opposite coming, you know, in the next coming days and coming weeks. And one more thing I just wanted to add. I know that we mentioned this a couple of weeks ago, but back to the whole documentation, it's also really important just to document now while it's fresh in your mind, the need for the loan. That's also something that you want to make sure you have in your file, and that will serve you very well if that's ever questioned.
Perfect. Thanks so much for your help, everyone. Have a great week. We will see you Thursday.